Well, more red-hot inflation is in the pipeline for consumers. That's our top story today on the Wall Report. I'm your host, Greta Wall. Producer-side inflation hit an all-time record high in March. The Bureau of Labor Statistics Producer Price Index surged 11.2% year over year last month. Now, that's the strongest gain on record in that survey, which dates back to November 2010. The PPI rose 1.4% monthly versus 1.1% expected. Now, meantime, the core PPI, which excludes food, energy, and trade services, rose 0.9% monthly and 7% year over year. PPI is a forward-looking indicator for consumer prices as producers pass down their higher cost to consumers. And oil prices are gaining again today amid new supply concerns. West Texas Intermediate crude futures rising 1.6% to over $102 per barrel. Brent crude futures up about 2% to nearly $107 per barrel. And this rally comes after peace talks between Ukraine and Russia hit a dead end, dashing any hope of a de-escalation anytime soon. Russian oil and gas production also hit the lowest levels since July 2020 this week, falling below 10 million barrels per day on Monday. The International Energy Agency does expect Russian oil losses to average 1.5 million barrels per day this month, with that number approaching 3 million in May. But the major indices are all higher today as Q1 earnings season did unofficially kick off. JPMorgan Chase shares are down more than 2% after missing Q1 expectations. The largest bank in the U.S. reported earnings of $2.63 per share on $30.7 billion in revenue. Now, that missed analyst profit expectations, but did beat on revenue. JPMorgan said it set aside $902 million in new loan loss reserves and said it lost $524 million due to the market impact of Russia's invasion of Ukraine. The bank did also announce a $30 billion buyback program. Now, meantime, Blackrock shares are up slightly after beating Wall Street's expectations in the first quarter. The investment bank reported adjusted earnings of $9.52 per share on $4.7 billion in revenue. That crushed analyst profit estimates, and revenue was in line with expectations. Blackrock said its assets under management rose 6% compared to Q1 of 2021. And then Delta shares are rallying more than 4% today on a strong Q2 outlook and a better than expected Q1. The airline reported an adjusted first quarter loss of $1.23 per share on $9.35 billion in revenue. Now, that was better than analysts' expectations for both. Delta said its fuel bill was 6% higher in Q1 compared to 2019, despite capacity still being 17% lower. The company forecasts that cost will rise another 17% this quarter. Delta did log its highest bookings in company history in the month of March. The airline said it does expect to return to profitability in Q2 and plans to fly 84% of its 2019 capacity levels. There's a look at those numbers we covered earlier. Apologies for not giving that up. All right, and then Bed Bath & Beyond shares are flat today after reporting a surprise Q4 loss. The retailer reported a loss of 92 cents per share on $2.05 billion in revenue. Now, that sharply missed analyst expectations for a profit of 3 cents per share. Same-store sales across all brands fell 12% year over year. Digital sales tumbled 18%. The CEO blamed the loss on, quote, major headwinds in the macro environment that have slowed the company's turnaround efforts. And it is a big Q1 earnings day tomorrow, with Morgan Stanley, Citigroup, Wells Fargo, and Goldman Sachs all scheduled to report ahead of the open. So be sure you're subscribed to my Coffee with Greta newsletter to get all of those details at 9 a.m. Eastern before the market opens. And I'll see you all back here for the Wall Report tomorrow at noon. Be sure to hit that subscribe button and ring the notifications bell before you go.